Now let us see how does the taxation of business profit for a non-resident works under the Income Tax Act. And there are two aspects which are relevant for examination here. One is that of a business connection, right? And the other one is of a PE. Both of them do exist under the Income Tax Act, right? But when you go to the treaty, it is only the concept of PE which is prevalent. But these two concepts taken together are somewhat correlated or actually even wider than what you have for PE under the treaty. Let's look at what this is. The following income, section 911, okay, of the Income Tax Act deals with this. The following incomes shall be deemed to accrue or arise in India. The use of the word deemed to accrue or arise in India indicates that even if the normal accrual or arising is not in India, by virtue of the common law relating to accrual or arising, by virtue of application of this clause, it shall be deemed to accrue or arise in India. All income accruing or arising, whether directly or indirectly, through or from any business connection in India. Now, what is business connection in India is not defined in the Income Tax Act, but the Supreme Court had a chance to discuss this particular aspect, right? A business connection, in terms of the decisions that have been given until now, has been kind of elaborated to be said that any activity in India, right, which has an intimate, a close connection with a non-resident, such that the activities in India and activities outside India together result in accrual of income to the non-resident, is called a business connection. So if there is an agent in India, right, who helps in the delivery of the goods which a non-resident sells, right, he helps identify customers, he helps conclude contracts. In those cases, if this agent is there in India and the production activities carried out by the non-resident outside India, the two activities actually interact with each other to result in profit from manufacturing activities for the non-resident, right? So this agent will be treated as a business connection of the non-resident in India. And all income which are accruing or arising through this business connection will be taxable in India. But then the question comes up is, would the entire profits be taxable in India? In this very example. For that, explanation 1 is prevailing and it reads as under, for the purposes of this clause, in case of a business of which all the operations are not carried out in India. If all operations were carried out in India, then obviously the entire profit is taxable in India. So if you are purchasing goods in India and you are selling goods in India, right? All the operations are carried out in India. Then basically everything has to be taxable in India. But if all the operations are not carried out in India, the income of the business deemed under this clause to accrue or arise in India shall be only such part of the income as is reasonably attributable to the operations carried out in India. So what you need to do in this case is, you need to find out how much is a reasonable attribution of the income to India, right? So if, say for example, this agent who's working in India would have been the only business activity which the non-resident was carrying out, how much profit would he make, right? And that allocation has to be done in many cases by use of transfer pricing methods, by finding out other companies who have similar businesses and things like that. But whatever is reasonably attributable to the operations carried out in India, only that income will be treated as accruing or arising in India, deemed to accrue or arise in India through that business connection, right? There's also an inclusive definition of PE under section 92F 3A of the IT Act, right? We'll just come to that definition. But there are certain other aspects in section 9(1) as well. Okay. What they say is that if the operations are confined to the purchase of goods in India for the purpose of export, then no income shall be deemed to accrue or arise in India. In case of a person engaged in business of running a news agency or of publishing newspaper, magazines or journal outside India, no income shall be deemed to accrue or arise in India if they are just collecting news and views from India. In case of a person who falls under certain specified categories, if they are just engaged in shooting of any cinematographic film in India, no income shall be deemed to accrue or arise in India. For a foreign company engaged in the business of mining of diamonds, if they display certain uncut diamonds in certain specified zones, then just because of that display act, they will not be treated as having any income in India. If there's a business connection through an agent, right, then of course there would be allocation of certain income, but this is an aspect which we have discussed in detail towards the end. Like we said, there's an inclusive definition of the PE under section 92F, right? But this PE is for the purpose of referred to in clause 3. Includes a fixed place of business through which the business of an enterprise is wholly or partly carried on. Now, the thing to be noted here is that the PE which is here is referred to in clause 3. This clause 3 basically deals with transfer pricing cases, right? And this is an inclusive definition. It says PE referred to in clause this includes a fixed place of business through which the business of the enterprise is wholly or partly carried on. We will discuss these terms as we discuss the concept of PE, as to what a fixed place is, right? What does carried on means and things like that. But one important part which has also been upheld by the Supreme Court in the context of this section is that this definition is very exhaustive. Since it is an inclusive definition, what the Supreme Court has said is that it will include all type of PE which are possible, right? Whether it's a service PE, whether it's a construction PE, whether it's an installation PE, right? As long as other characteristics of this definition are satisfied, it is not going to be restricted to a fixed place of business PE, because it says it only includes fixed place of business. It doesn't say that other forms are excluded.